Bitcoin has been on a downtrend for the past couple of weeks, as you can see right here. From its previous local high, we're currently down around 20%. So by all definition, this is a correction. If it goes down another 10% and it stays there, then we might possibly be in a bear market. But in this video, I'm going to clarify exactly what's going on and when you should start getting worried. We're not there yet. And I'm going to show you exactly what's going on when we take a look at the technical analysis for Bitcoin. So what you have to understand, the broader market, we're currently a month past the government shutdown. The entire market is down. Everything's down. All the major stocks are trading down. All the major indices are trading down. And Bitcoin is a risk on asset still. That means it trades with the entire market. When the entire market is down, Bitcoin will trade with the entire market. It's not a risk off asset like gold. So if we compare Bitcoin to gold, we see that gold had a massive 30% rally in the month of September, October. But as of the past week or two, even gold is down from its high of 30%. It's down 10%. And it's coming up against this 50-day moving average. I'm showing you the gold chart because all the capital has to flow somewhere. Whenever there is a major disruption in the market, like a government shutdown, for example, and you see even major companies like Microsoft, Nvidia. So this is a heat map for the entire month. You see these major companies. Meta is down 20%. So these companies hold up the entire S&P 500, and all these companies are trading down major 20%. Microsoft 5, Nvidia 6. So Bitcoin being a risk on asset still is going to trade down with the entire market. But if we take a look at the technical analysis, as you can see right here, I have these trend lines drawn right here. And if you take a look at the last update I made on Bitcoin, I had the same exact trend lines drawn. Let's zoom out to the weekly so we get a little bit of a bigger picture. So Bitcoin is trading within this channel right here. So I can draw a wave pattern, first wave, second wave, third, fourth. So Bitcoin is trading in this channel. And it's absolutely normal for Bitcoin to trade down to this price point right here, down to around $96,000. So if you go back to the daily chart, even if Bitcoin starts to trade down to this price level, like 96, there's no problem. That's still part of the normal channel that it's trading within. What we want to see is that if it does come down to 96,000, we want to see a bounce of this 96,000 and it start to trend up. So that's what we want to see. As of right now, nothing out of the ordinary, nothing unusual. There's nothing to worry about. When you should start getting worried, for example, I'll show you that at the bat right now. I won't keep you waiting too long. So if we go back to the weekly chart, you see how right here, if we zoom in a little bit, you see how as of this week, it's closing below this 50-day moving average. So next week, if it closes clearly below this 50-day moving average, then we will start to get worried. Then we should be like, I think we might possibly be in a short-term bear market. But you have to take everything into account. We have the most pro Bitcoin administration in US history. We also have some of the biggest companies on the market putting Bitcoin on the balance sheet. We have the Bitcoin ETFs that makes it super easy for just the regular person to go buy Bitcoin. So if we take a look at the Bitcoin ETF flows, this chart does a really good job of showing what's been happening. So we had the biggest ETF flow back in July, and it's been trading down for the past couple of months. And you have to understand, when ETFs make Bitcoin so easy to buy into, it also makes it very easy to sell. So there is a lot of profit taking going on. And going back to our Bitcoin weekly chart, I want to show you 3 inflection points. So right here, when it came up and touched this 50-day moving average on the weekly chart, that was back in September. Right here, again, when it touched the 50-day moving average, that was back in April. And we're on the 3rd inflection point of Bitcoin touching the 50-day moving average. Again, one more time. If next week it closes below this 50-day moving average, that's when you might start to get worried. But Bitcoin is one of those assets that you should not be trading. You should be just saving your money in Bitcoin because inflation is here to stay. Your money is going to lose value. If you're saving money, you are losing purchasing power. So even if Bitcoin trades below this 50-day moving average, personally, what I would do is I would just keep my same strategy. I would just keep buying Bitcoin every week, every month. Whenever I have some extra cash after paying all my expenses, I just save my money in Bitcoin instead of saving it in cash. And that's a strategy that you should implement too. a lot of you are wondering what's going to happen with the Bitcoin price. So one or two things. If it closes below this 50-day moving average, then we have to come back and understand what the next leg down will be. But there's a possibility that it is going to bounce off this 50-day moving average and start trading back up. And if it does that, then the next leg up would be around $140,000, which will take maybe 2 or 3 months to get to. Might happen even sooner. But look at this channel right here. It's clearly trading within this channel. So there is nothing to worry about when it comes to the technical side of Bitcoin. It is moving very predictably. So this video is very short. I just want to quickly show you what's happening on the technical analysis side of Bitcoin price. As of right now, there is really nothing to worry about. If you want to keep an eye out on Bitcoin, go to the 4-hour chart. If by next week it's trading above $107,000, then we're back up and it is going to continue its rally back up to around $140,000 until it hits this upper trend line of the channel again, and then it's going to trade back down. It's going to trade in the channel. The only way this channel breaks is, say, on the upper bound. If a massive volume comes in and we're clearly above $140,000 and it tests this price point as the next support, then we're going to maybe $150,000, $200,000. Again, that's more of a possibility than anything else because there's so many things you have to take into account. For example, the interest rate is going to zero by next year. That's 100% guaranteed. Jerome Powell is going to be out next year. I don't know the exact month, maybe February, March. Trump is going to put someone in who is going to drop the interest rate to zero. So next year, 100% guaranteed, 100% that the interest rate is going to zero. And that is going to be a catalyst for the entire stock market, all the risk on assets like Bitcoin to skyrocket. And by next year, I predict Bitcoin will be anywhere between $150,000 to $200,000, maybe even $250,000. But that is very predictable for next year. As of right now, if you're worried, just draw these channels on your graph and just pay attention to what happens on the weekly. So even on the weekly, say for example, next week, it closes below this 50-day moving average and it breaks this trend line right here, even then, I don't think the price will drop below $80,000. And that will be pretty devastating for a lot of people. And it might just be a 1 or 2 day drop down to below $90,000 and it'll just come right back up because Bitcoin is one of those assets that is getting more attention. More and more companies are buying in massively. When we get more clarity about what's going on with the government shutdown and things go back to normal, this Bitcoin price is going to start trading right back up. So as of right now, making this video, I'm not too worried. The main thing that we have to look out for, that hopefully it doesn't close below this 50-day moving average. And that's pretty much it for the Bitcoin price. I guess my overall message when it comes to Bitcoin is that you should not be trading it. Even if it trades down to below $90,000, you should be just saving your money in Bitcoin. It's good practice to just save money every week, every paycheck. You get $100, whatever you can, $1,000, whatever is within your budget. You should be saving money. But the thing is, you should not be saving fiat currency. Save it in Bitcoin because your fiat currency is programmed to be inflated and you will have less purchasing power in the future if you're just saving in fiat currencies. So instead of saving in fiat currency, political currency, US dollars, just save that same amount in Bitcoin. And long term, you will come out way better than if you're just saving in fiat currency. So that's it for this video. Please give this video a like. Please subscribe to the channel. I try to bring you undervalued stocks. Bitcoin is one of those assets that I do not trade. I save my money in Bitcoin every single week whenever I can, whenever I have extra cash. And that's the ideology that you should adapt to. And I will see you on the next video.